why doesn't somebody just buy all of the tickets with a big enough jackpot and then basically guarantee themselves a jackpot? So can you tell us about that?
The problem with your method, real quick, is that I think it's about 292 million to 1, right? And they're $2 tickets, so you need almost 600 million to get every combination. The problem is, if somebody else hits, you're splitting that money with them, you could end up being a catastrophic loss.
Hi everybody, Joseluiz Morales. Welcome back to the Morales Group Show. Today we've got a very special guest. This is episode number 73. We have Ryan Mcguiness.
Hey guys.
He is a previous flip investor. I think still does some flips. Has managed rental properties as well too. Car enthusiast. Now into private lending, also philanthropist in Florida or across the country. And then also has some really interesting things like a lotto story that I kind of want to share with you guys. So welcome to the show, Ryan. How are you?
Hey, I'm great. Appreciate you having me on.
Cool, man. So we found you on Instagram and just looking at your profile, man, very interesting. Interesting how you've done a couple of different things. Would you mind just sharing with our audience, who is Ryan Mcguiness? How did you get into real estate? And just a little bit about your background, just so that people can understand who's on the show.
Yeah, absolutely. I grew up in the Tampa area, a suburb called Brandon. And I went to school at University of Florida. In 2008, I came back down to get a job with a hedge fund. My degree was in finance. And of course, you know, the world pretty much ended in 2008, right? The recession hit, horrible timing. You're fresh out of school, you're ready to make all this money, and you know, it couldn't be worse timing. So I learned a lot from that, from older brother and other bosses, and kind of saw how they handled it before I was really mature enough to, you know, have a huge responsibility in that kind of market. So hopefully if there's ever a shift, you know, I'm preparing myself ahead of time based on what I learned. I saw a real value in real estate for the first time because we were mostly into equities, bonds, options. And there's, I'd say even more so now, a lot of market manipulation, right? When you look at stocks like GameStop or an AMC or things where the fundamentals just don't make any sense. However, everything is just through the roof or whatever the case may be, up or down. But really, fundamentals of that are thrown out the window. In real estate, while there's market fluctuation up and down, you know, everyone needs a house. That house has certain material costs, certain labor costs. At the end of the day, it's relatively a certain value. You know, there is some fluctuation in there, but it's a real substance. It's a tangible asset. So we started flipping houses in about 2009. We have flipped several hundred houses in the Tampa area since then, and that's what got me originally into real estate. And I've seen a lot of the good side of flipping, and I've seen a lot of the bad side of flipping. You know, it's very glamorous. A lot of times on these TV shows, they show, oh, you bought it for $100,000. You sold it for $200,000. You made $100,000. You know, there's no such thing as interest and taxes and a roof that you didn't know about, and you know, a foundation screwed up. And there's a million scenarios. You know, somebody steals all your wire out of the walls. I mean, anything that can happen. So it's a lot more that goes into it that maybe a lot of people beginners may realize.
Yeah, no, I agree with you 100%. On that. A lot of times it looks really glamorous on TV, but then when you actually get into it, there's just a lot of things that could go wrong, and sometimes they do go wrong. Would you mind telling us about your first flip? What did that look like, the first flip? And then maybe you can transition into like some of the good things about flipping, and then maybe some of the not so good things about that you kind of learned into flipping and why you transitioned into the private lending.
Sure. I mean, it's going back about 12 years now, so I don't remember all the details of the first one, but everything went fairly smooth. You know, there's always a little more headache than you realize, but it was overall a good experience. It was just a standard single family home, you know, entry level, which back then prices were down so much. You know, you're talking about maybe 100,000, 150,000. I don't recall exactly, but it was overall a good and profitable experience. But the longer that you go on, we kind of, how we transitioned into lending was we were looking for something with, you know, yield still, but not so much of the risk, because when you're, you know, again, when you are flipping properties, you're dollar for dollar on a profit or a loss. So, if it needs a new roof that you didn't realize, and that's $12,000, or rewiring, or there could be some other events that where you really thought this is a home run, we're gonna make $30,000-$40,000, and you end up after paying any interest expense and insurance and all and property taxes, and sometimes it's not even your fault. It could be a contract that falls through. You have it marketed, you get under contract. Hey, now it's a 30, 40 day waiting process, and the lender on the 38th day says, oh, they bought too much stuff at Best Buy last week, we're going to have to cancel the funding. And that's, we see a lot of that on the lending side as lenders as well, and we try to help facilitate those deals to get closed. But it takes a lot of manpower. You have to run a lot of crews. Those crews, there could be theft amongst them. There could be theft on the job site. Mm-hmm. Or just people not showing up and mismanaged or any kind of scenario that could play out on the job site.
Yeah, not only that, like the longer it takes, the less profitable it is sometimes, because you've got all these holding costs as well too. But I agree with you. I think that there's a lot of moving particles. So it sounds like the reason you transitioned into lending is you were looking for something that still provided a very good income, but at the same time, there was less risk, but still something that you could probably scale out and do a high volume of, which sometimes people, when they're getting into a business, unless you're in business already, you don't really think about that until you actually, because I didn't start thinking about scalability. I didn't start thinking about processes, procedures until I actually got into the business. And then you start thinking about these things as well.
You're absolutely right, and there's many tangents on that, but right now we have about 150 loans in our portfolio. To manage 150 flips, you're talking about teams on teams on teams and overhead, and the cost of administrators, and your payroll costs would run you tens of thousands of dollars per week. We run our operation with, again, around 150 current loans, and it's me and my two brothers. Right? We have no employees. Zero overhead. There's no payroll to be made. I mean, it's a very simple and easy process. Now, as far as the safety, our one minimum is that we do require a 30% down payment. So we have no credit analysis, we have no income verification, but we feel as a lender with 30% down, we're okay bypassing all that information. So with that, we have a buffer, right? When you're the investor and you're the flipper, again, dollar for dollar, that profit is yours or that loss is yours. Well, now that house that's $100,000, they have to fire sale for some reason, something crazy happens, it sells for $70,000. Us as the lender, we're still protected. Unfortunately for that investor, they've lost $30,000, but we're still okay. All of our notes are 12% annual. We do have no prepayment penalty, which is rare in the hard money lending world. So we're happy with that 12% yield plus an origination fee on the front end, and we can kind of keep turning over that money. And we do have a lot of repeat customers that are very happy with us.
Cool, man. And then is this something that's like your own company, or is it something that's mainly like a brokerage, or how does that work?
No, we're direct lenders, so we're the decision makers. A lot of brokers commit to deals, and again, we drum a lot of business from this, is they commit to deals, and when it comes to the closing, they can't get it done. Yeah. And then we get a call 2 days before closing, scrambling. They have $50,000 hard deposit that they're going to lose, and we try to salvage the deal. We can work extremely quickly, because really at the end of the day, it's what's the property worth, right? And you either know it at the time, or an appraisal's already been done, or we can get an appraisal done in 2 or 3 days. So this 30-day underwriting period, or 15-day underwriting period, or 45 to 60 days on some commercial properties, it's nonsense. You have a lot of people pushing around papers back and forth, and then on the 28th day out of 30 days, then somebody might look at the file, right? So we have a meeting immediately. I'm very responsive. You can call me anytime. I always answer, except for maybe on this interview. But you can always get a hold of me. I'll get the information right away. We'll get started on the process, and in 10 minutes, you'll know, hey, we can bypass an appraisal on this. We know we can get it done, or we need an appraisal and we need 2 days to get it done. But you're going to have your answer with us, and you're going to know exactly what we can do. And we always, whatever we say, we commit to it 100% of the time. So again, we do see a lot of guys, trying to get us down on our interest rate or get us down on our origination fee. And I'm very clear. And I say, look, maybe we're not the cheapest guys on the block, but just keep my number. And more than likely, more than you would ever imagine, we get a call back again. And when these people, like I said, the people's deposit or they're risking to lose the deal, and we have 2 days to close it. And as long as title is done, we don't love it, but we can get it done in a day or two.
And then what about the asset classes that you guys are lending on? Is that typically like residential? Is it commercial?
Yes.
Development?
Yeah, so we're based in Tampa, like I said, so we prefer this area. I would say 90% of our deals are within, probably 2 hours driving time. Yeah. Probably 9% in the state of Florida, and then probably 1% outside the state if it's some kind of sweetheart deal. Because I don't know the Baltimore or the California or this or that. If you tell me X street in Tampa, I probably know the values of properties there. And if not, again, I have appraisers on staff or on standby that can get it done in a few days and get me an idea. So we do residential. We do commercial, and we do land. We lend up to 70% on residential and commercial, and we lend up to 50% on land because, if there's some kind of downturn, not everybody needs a piece of land to live on, right? And everyone needs a home, and a lot of people still need a place to conduct business. So
it sounds very simple. Like, it just sounds like this is what it is. We're protected with 30%, because you really are. 30%, is a big gap, like the market would literally have to tank more than 30% in order for anything to affect you guys whatsoever.
Correct.
And it sounds like you guys have, they want to transition from their job to flipping, or they want to transition from flipping to lending, or from realtor to investor. Do you recall what that process looked like?
It wasn't really like a stop and then start. It's always been fluid, and we still do some flips, and I still do new construction. On the new construction, I bought a bunch of lots cheap, the last 3, 4, 5 years. Now, if you have to go out and buy those lots, that's really all your profit that you were going to make. So I do have lots that I'm building out now, and those will probably be the end of the new construction homes. But it's the process of it. It seems like it's simplified, and it really is. A lot of other lenders really try to. They make a simple process and they add in all these tangents to it. And really, what is the value of it? And also, it's 70% max. Our portfolio overall is about 52% loan to value, and that's current loan to value. So in an up market, right, you're have all that advantage of market increase. Also, a lot of these properties are being renovated or improved. So you got to understand the value of all that is going as well. So the worst case scenario is 70% of that day's value.
That's awesome. And then how did you know? You're like the second or third person. I'm part of the Collective Genius Mastermind. There's another guy named Frank Conva, and he started buying like pieces of land like 5-6 years ago. And I almost feel like now more people are jumping onto the piece of land because prices have gone up. Was it just something that you felt eventually you can build on them, or what was the thought process? Because I almost felt like you were ahead of the curve.
Yeah, the numbers made sense at the time, and we don't have the infrastructure to build 50 homes a year, nor do I want to be a main home builder. It was just kind of a side project where we would do a couple of months here and there, and until those lots got exhausted. So we were lucky that the market gone up, right? It could have gone down and said, hey, we bought these lots, and we could have bought them with a 20% discount 5 years later. So any asset class that anybody is invested in the last decade, right? It could be watches, it could be cars, it could be land, stocks. You're a genius, right? You could be a really bad trader right now, crypto, it could be anything, and you're a genius. So this is a really easy market to be a bad fundamental trader and make money no matter what. If you're not making money in the last decade, then there's really something wrong.
Talk about the fundamental trader. Like my fundamentals in terms of real estate are numbers based. And that's why I love real estate. They're all based on cash flow. Like, does the property produce enough cash flow, or am I buying it at a significantly discount? You talked about fundamentals when you were in stocks, and now you're talking about fundamentals in real estate too. What do you mean by that?
Yeah, so going to stocks real quick, or bonds or options, you're looking at the basis of a company, right? What are their earnings? What are their future outlook? and really just the core of the company, and that you feel that company has room for growth, or maybe you're shorting a stock and you feel, it doesn't have room for growth, and those will go down. And then with flipping, I mean, I'm sure you look at it and see this every day, the same numbers. Hey, we're buying it for this. We think when it's renovated, it can sell for this per square foot. Obviously, this is our carrying cost. This is our rehab, and what's our exit strategy, and to make sure that we can achieve that. With the notes, with the mortgages, it's not, that burden is on the borrower per se. And again, we want everybody to make money. We basically want to be a funding partner, and they make money, and instead of giving us half on a JV, they know upfront what their cost is. It's 1% per month in an origination fee, and they factor that into those numbers that we just spoke about. So that is the fundamentals. On the loans, it makes it simple for us. We just have to feel that the property isn't going to take any kind of catastrophic downturn, and we lend up to 70% of it. And I didn't think I mentioned this yet. All of our notes are 2-year balloons. So, we're not stuck into a 15-year or a 30-year mortgage. Who knows what's going to happen in the next decade? And if we see some kind of, market meltdown via real estate, then we can kind of scale back operations. We're not forced to lend. We're not forced to do new deals. So if things get shaky and we say, okay, maybe we go down to 60%, or maybe we just take a pause. And that goes back to the simplicity of my personal company, where we don't have a lot of managers and salaries where, hey, we have to do 50 deals this week, or we're negative, we're losing money. So it's a very cream of the crop. We take the best deals that we have, and we try to keep it very, very simple and low overhead here.
That's awesome. And then, so these are a little bit longer. Like the 2-year balloon is a little bit longer. Like I've talked to most hard money lenders, and most of them are like 6 months, 12 months at the most.
Yes.
But it sounds like, why is that?
So it's an advantage for the borrower, we feel, because again, they can buy out at any time without prepayment penalty or minimum interest. So we don't want them to feel, hey, I'm under the gun in 6 months. What's going to happen if this thing goes over, or a year? So we say, hey, you have 2 years, and we'll extend it. At the end of 2 years, if for some reason you have a property with good payment, we'll extend that too. But we want to take the pressure off of the borrower, and if they want to do it, it's no problem at all.
That's so awesome, because that's completely different. The way, just so our viewers understand, the way that it works with most private lenders is after 6 months, they'll charge you another funding fee to renew the loan, and there'll be an additional fees involved every 6 or 12 months. So you feel under the gun. I've had properties where I'm like at the 5-month mark, and I'm trying to sell it, and I'm like, man, in another month, there's going to be another whole new set of fees that I have to factor into the deal, versus, hey, I've got all this time to actually sell the property.
Exactly. And another pitfall on some borrowers that are flipping, they don't realize that there's an early termination or prepayment penalty or minimum interest. They call it a bunch of different terms. We don't have any of that, right? So you did a great quick flip, and you got in and out in 3 months, and you're 1% a month. Well, in your terms, you didn't realize that there's a 12-month minimum, right? So now you owe another 9%. So you made 20% on this flip real quick, and now you owe another 9% that you didn't know about. So this is something to be aware of for maybe somebody entering into the flip game. Make sure you understand. And there's a lot of, we've seen these fee sheets on these lenders that are just like 10 fees long, underwriting fee, or even an upfront cost. They'll charge you $500 upfront, non-refundable, to look at your deal. Like, I would never charge that. If we can't get the deal done, I don't want your money. It's plain and simple.
Yeah. So how does somebody, like, if somebody was looking to get into lending, what advice would you give them if they wanted to like grow a repeat client book of business? Like, what would you say are some of those principles? Yeah,
I think again, doing everything I say. If it comes out of my mouth, I'm doing it. That's really, it should be easy, but it's the hardest thing, and I'm sure you see it in every aspect of, it could be the plumber, it could be anybody. They just don't have good work ethic. So really just giving them that commitment and building that relationship, and not trying to gouge every nickel and dime out of these guys, and really building a partnership and saying, look, this is what our costs are. Build that into your numbers, like we spoke about earlier. Make sure that it works. And then, we're here if you need the funding, and we can get it done quickly. Another thing about our speed is, and this is in the last 6 to 12 months, we've been seeing this, and I never saw it before, is, if you're buying a property and you're putting a conventional financing offering on it, 30 days, whatever, to 45 days. A lot of times those are getting tossed right in the garbage now, right? Because you got guys closing in 10 days, 5 days. And as a seller, of course, it's advantageous to take those offers.
Yeah.
So a lot of people are using our money just to secure it, get it in there, and they might refi out in 30 to 45 days with us. They secure the property and they move on. So we're really about building relationships and getting that repeat customer and getting the problem solved. We don't look at it as, okay, we can't finance this because of X. We look at it as, we're going to finance this. What steps, or how can we do this, or what can we cross-collateralize? How can we get this done? And as long as it's a person that has legitimate assets or something, we will get it figured out and get it funded for them.
So it's more of thinking outside the box versus just, hey, look, this property doesn't make sense. You guys are looking for ways to make the deal.
100%.
You know what's really awesome? That like it's so simple. Just do what you say you're gonna do, and people will come back. If you say you're gonna do something, do it and stick by it, which is great. So let's talk about some of your passions. So I read something online about putting a pool of funds together to buy lotto tickets. I was like, wow, because I've always had that idea. I'm like, well, why doesn't somebody just buy all of the tickets with a big enough jackpot and then basically guarantee themselves a jackpot? So can you tell us about that?
The problem with your method, real quick, is that I think it's about 292 million to 1, right? And they're $2 tickets, so you need almost 600 million to get every combination. The problem is, if somebody else hits and you're splitting that money with them, you could end up being a catastrophic loss. But yeah, my 15 minutes of fame on that got totally blown out. It was wild. So I started with some friends and said, okay, it started out around 500 million. And I still do it with friends if the jackpot's above 500 million. But it was that one that snowballed. I believe it was the Powerball snowballed to $1.6 billion. So it was like frenzy. So I got my friend. It started out as friends, and we all got together and we chipped in $500 a piece. It was entertainment. Nobody. We were just having fun. Like it was like a night out on town. You spend money, whatever. So we got these Powerball tickets with it. Then a couple news stories picked up on it, and then it kind of went viral like anything else online. And I had people sending me, Venmos and PayPals and all kinds of stuff all over the world wanting to get in. The problem was literally like printing the tickets. Like I made great friends with the lotto guy down the street. I would just call ahead and say, hey, I need 50,000 in tickets, and he would print them like on credit almost, And then I had, because for transparency, I had to scan all the tickets into this private group just so everybody, saw. So we ended up with like 292 people in the group, which I think comes out to $146,000 in tickets. So it brought our chances down from 292 million to 1 to I think 4,000 to 1, if I remember correctly. Still a crazy, it's like going to a college stadium and getting your name picked out of the hat out of everybody there. I mean, still a long shot. Obviously, I didn't win the 1.6 billion. I would have had a lot of happy people, a few hundred happy friends, and who knows? But yeah, we didn't hit. It was fun. I was getting tweets from Mike Tyson, and I was on the front page of the Tampa Bay Times twice actually. So it was a good fun couple of weeks, but a lot of hours. I tell you, I've worked over 100 hours on scanning tickets and doing all that stuff.
Wow. Yeah, that was like because when we looked you up, I was like trying to find some info on you, and then I came across that article, and then I looked at the picture. I'm like, it is him. And it was just interesting because I've always had that idea. So that's awesome. I was like, man, this is somebody I want to get connected, because I would throw in $500 all day, just for fun, That's cool. So what are some of your other like passions? Like I know that you do you're a car enthusiast.
Absolutely.
Also, I know that you are very involved in the community as well too. Do you mind elaborating on some of those things?
Yeah, so cars have always been the passion growing up. My dad was a big car guy. We always went to the car shows growing up. I've always had classic cars here and there, and acquired more of them recently. But two things I'm excited about in relation to cars. There's a motor enclave in Tampa is opening up. I'm an investor, as well as I'll have a condo unit there, but it's an automotive community with condos. So you basically have a garage. You can build it out however you want. There's going to be 300 of them. It's a 200-acre site. There's going to be an 80-acre off-road course. There's a 1.6-mile F1 design track on site. So just think of it like a country club, but for the automotive community. The founder, Brad, did a very successful one in Detroit. and now he's down here to build the one in Tampa.
So it's basically like a place where everybody is a car enthusiast. Everybody has these wild cars, and there's a track where you can basically race the cars if you wanted to.
Exactly. Plus a 80-acre off-road course too, so you could take off-road vehicles there.
That's awesome. You mind sharing with the audience some of the cars that you collect and why?
Yeah, most of them are classic cars, 77 Porsche Turbo, 61 Lincoln, 47 Lincoln convertible, 41 Lincoln. Most of them are classics, newer Rolls, but most of the classic cars. They're easy to maintain and keep, and they just go up in value, so it's a good fit. And then I'm building a 9,000 square foot warehouse with indoor storage. So I think there's a demand, and that's kind of how you could turn a passion into a income producing property, or at least offset the cost. I think there's a demand for high-end storage. Well, I know there is, because people are shelling out $200,000 to $1 million at the Motor Enclave. There's a ton of amenities there, but to store their cars and have part of that passion. So once that's built, which should be in a month or so, I'm going to do rentals out of it for indoor high-end luxury car storage as well.
That's awesome. So how does somebody go from being young, or being in stocks, to flipping houses, to now being able to have a car collection? Like how do, I know that there's a lot of people that look at this, but they're like, okay, how would I get there if I wanted to get to that level?
Yeah, a lot of fortunate success. A lot of things fell my way, I could say, but really I think it gets back to forging those relationships and doing what you're going to say, or what you say you're going to do. Because I have lenders that I work with, or institutions. My sources of capital, the reason that they work with me is because they know how I am and they know how I work. Mm-hmm. If I was unavailable, or if I worked how some other people work, I wouldn't have those relationships, and it wouldn't allow me to have the success that I'm fortunate enough to have had. But really, it's about those basic fundamentals.
That's awesome. So you're pretty involved with charities, right?
Yes, in Tampa I am, or wherever.
You mind kind of sharing with us a little bit about that?
Yeah, the main one that I work with is Where Love Grows. Vicky is a wonderful lady. She's the founder. She came down from New Jersey. It basically teaches kids at-home skills to eliminate hunger in Tampa. Teaches them how to cook. You can give a kid food at school, but we try to teach them to cook so they can then go home to their house and make those meals with very basic ingredients. So, to hopefully eliminate hunger by any child in this area.
So I know a lot of people that make a lot of money and donate, and I know a lot of people who make a lot of money and don't donate. Like, what made you want to get involved?
Well, first of all, if you meet Vicky, she's amazing. So as soon as you meet her, you would want to help in any way you can. So this particular organization, we're literally teaching children how to cook. So it's not just, you can't just write a check for that, right? So I do raise money for them, and I help with all the costs of that. But I also help with volunteers, because some events, around the holidays, we may need 50 or 100 volunteers to come in there, and we're literally doing the cooking and teaching all that.
Yeah, it's interesting because I donate money, but I haven't donated much time. But I know that the time is almost more rewarding and more valuable in some cases than just the money. I donate, I'm part of Big Brothers Big Sisters in Ventura County, and we obviously donate some money to them. But would you agree with that statement, that it's more more rewarding to
absolutely. And we get follow-up letters, that go to Vicky, and it's like one of the kids saying, "Hey, I taught my brother how to make this food item at home now," and you're really impacting somebody's life then. You're really teaching a child how to not be hungry any longer off of basic items.
Yeah, agree. Cool, man. Is there anything else that you think would be of value to our audience, or anything else that you think we could add?
I mean, I'm always available. Like I said, if anybody has any questions, even if it's just a question about flipping, maybe wanting some experience, they can reach out to me on Instagram. It's Mr. Mcguiness, MrMcGuinness. Again, I truly mean that. Like, I will speak to whoever, and if they're thinking about getting into it, I'm happy to look at what they have going on. If I can help them, great. But there's a lot of opportunity to make money in real estate from a million different angles, right? Like, and there's tons of ways to do it. So you just have to be mindful and get the knowledge prior to going in, and don't just go in blind, because even if you have all the knowledge, there's still going to be some surprises along the way. And I think we've all experienced that.
That's awesome. Cool. Well, thank you so much for being on the show. This was episode number 73 of the Morales Group Show. If you've enjoyed this episode, feel free to hit the subscribe button. You'll be notified of future episodes that we have, and feel free to share it with any friends, family that they may find value. Thanks again, Joseluiz Morales, Morales Group Show, Ryan Mcguiness, episode number 73.
Take care. Thanks, guys.